Elon Musk talks Tesla FSD Beta 11. 1. Tesla's full self-driving FSD Beta version 11.4.1 release notes are now being shared online, and there truly are a host of notable updates, much like Elon Musk recently noted. The outspoken CEO says that the update features major architectural improvements and reiterates that it goes well beyond a point release. For those who haven't been following the development related to FSD Beta version 11.4.1, Elon Musk recently tweeted that the update should really be classified as version 12, since it's pretty substantial compared to typical point updates. However, he also said that Tesla is reserving the next numerical update for when FSD is end-to-end AI. Interestingly, in the past, Musk said FSD would never need to be end-to-end AI, but he changes his mind often as the technology progresses. At any rate, people have been posting FSD Beta version 11.4.1 release notes on Twitter since yesterday, which is stirring up plenty of chatter in the Tesla community. The notes are as follows. As you can see, it's not just a bunch of trivial updates or bug fixes, but rather, some really significant stuff, though we have no idea what works as advertised. Whole Mars catalog brought specific attention to one portion of the release notes, to which Musk replied with the reiteration of his words from earlier this week. Since the release started rolling out, Twitter account Tesla owners Silicon Valley, which often interacts with Musk, tweeted the CEO's recent explanation about the update. Along with Musk's words, the account posed a question about Smart Summon and Reverse Summon. Musk simply replied, "Major update coming in a few months." We read that as a major update to the Tesla Summon features, since that was the question he was replying to. It seems pretty clear. However, Musk has been known to put out tweets and replies that are a bit ambiguous. It comes as no surprise that well-known FSD beta tester Chuck Cook jumped on the opportunity to clarify. Chances are, he realized as well as we did that Musk was likely referring specifically to the Summon features. He also knows full well that if Musk is online and engaging about these topics, it can't hurt to try to get more precious details. To no surprise, Musk hasn't responded to Chuck, and it will be a bigger surprise if he eventually does reply. What do you think are the answers to Chuck's questions? Perhaps Musk doesn't even know yet, since it seems this whole FSD program is a work in progress that adapts as it moves forward. Source: reposted and summarized from Stephen Loveday at Inside EVS. Tesla expanding 4,680 EV battery cell facility on Cato Road. According to details from recent filings discovered by Teslarati, Tesla has already started the expansion project at its Cato Road facility, near the Fremont factory. The U.S. EV maker has been using the building on Cato Road as a pilot line to develop and produce its proprietary 4,680 EV battery cells. Tesla hasn't kept the Cato Road facility a secret. In fact, it has kept us apprised of the progress of pilot production and has been stockpiling its new 4,680 battery cells for some time now. The automaker has also used the building for research, as well as other battery-related pursuits. While the materials lab at Cato Road has been subject to ongoing upgrades, Tesla just officially filed for revisions to the expansion project at the facility in April 2023. Teslarati says Tesla first filed a permit to expand the materials lab way back in July 2021, and has been submitting additional paperwork and performing updates ever since. However, the most recent filings suggest Tesla is ready to move forward with actual expansion efforts. With the Tesla Cybertruck on the way this year, different Model 3 and Model Y trims becoming available, and the potential for a refreshed Model 3, it makes sense that it could be time for Tesla to ramp up battery cell production. Tesla shared its proprietary 4,680 battery cells and future plans back in 2020 at its official Battery Day event. Though it noted that it was something that wasn't going to come into play on a significant level for a few years. The cells are said to have higher energy density, longer life, and other advantages over the other cell formats Tesla currently uses in most of its vehicles. Source: reposted and summarized from Stephen Loveday at Inside EVS. Tesla cuts prices on supercharging in Europe by up to 25%. It seems we learn about new Tesla price cuts a few times a week these days. However, this time, it's not on the EV maker's cars, but rather, its proprietary DC fast charging network. Tesla has now cut supercharging prices in most European markets. As most legacy automakers field the transition from gas to electric cars, budgets are constrained, and they're losing money. This will change over time, but the initial investments are substantial. Tesla spent most of its existence on the verge of bankruptcy. But now it's in a position of advantage over most rivals, as its margins are impressive. It's generating profits, it has lots of wiggle room as far as cash flow is concerned. And it's growing exponentially. In the case of the price cuts to Tesla's EVs, it was able to do so mostly thanks to its high margins. However, it did see a drop in revenue, and its margins obviously suffered. While the company could choose to raise or lower charging prices freely regardless of the impact of other factors, that's not the case here. Energy prices in Europe are finally leveling off after much turmoil. Tesla CEO Elon Musk noted over the past few years that the current global economic situation was such that the company had to plan for the worst. It raised prices and made forecasts on the safe side to ensure that it didn't end up in a dire situation. Now that the pandemic has officially come to an end, supply chain issues are fading away, and the price of energy appears to be somewhat stable. Companies can begin to transition back to the way things were before all the turmoil. The war in Ukraine also had a notable impact, and while the conflict hasn't been resolved, it's having much less of an impact than it was in the past year. Source: reposted and summarized from Stephen Loveday at Inside EVS. Analyst forecasts Tesla shares will reach $280 in a year. Tesla's stock has dropped some in the weeks since the automaker's Q1 2023 earnings call, with some citing concerns around slowed inventory turnover and price cuts. However, one bullish analyst from Piper Sandler is still banking on the company's long-term profits, and he expects Tesla's shares to surge significantly over the next year. Piper Sandler analyst Alex Potter expects Tesla's shares to jump to $280 in the next 12 months, which would represent over 60% in gains, the Motley Fool reports. Despite recent bearishness, Tesla shares are up almost 40% since the beginning of the year, while the S&P 500 index has only jumped 8% during the same time. The news comes as some analysts have dropped price targets on Tesla's shares in recent weeks, even including Potter. Many have cited concerns about the company's dipping profit margins following price cuts across its lineup. Prior to the earnings call, Potter previously held a $300 12-month price target on Tesla's stock, noting lowered estimates for 2023 to 2025 in his newest update. In response to margin concerns during the earnings call, Tesla CEO Elon Musk emphasized the company's long-term objectives for autonomy, which he and bulls argue would drive significant profits no matter what margins the vehicles are selling for. Potter holds this view too, as part of his reasoning behind the still bullish target. Although Potter doesn't expect Tesla's full self-driving beta to reach total autonomy this year or anytime soon, he still echoes that Musk is right about potential future profits through a network of robotaxis. He also highlights Tesla's impressive free cash flow and potential for margin expansion, as well as the automaker's rare ability to finance its own business compared to much of the industry. The $280 price target on Tesla shares represents the fourth highest of any analyst tracked by Bloomberg. Tesla also reported a 15-day supply of inventory vehicles for the first quarter, which the publication notes is considered fairly healthy in the auto industry. Still, the current inventory levels paired with uncertain macroeconomic headwinds are keeping some bearish on Tesla, as they worry that high supply could risk the company's more than $500 billion market cap. Tesla remains an important growth stock for many investors, and while there's no way to tell where the company's shares are headed, bullish shareholders are looking toward the long term, while price cuts and macroeconomics have made the company's profits rocky in the near term. Many expect substantially increased revenue down the road with the improvement of FSD and its subsequent use for robotaxis. Source: reposted and summarized from Evanex at Inside EVS. Tesla launches Cybertruck raffle. Tesla is offering a free Cybertruck as part of a raffle that marks the introduction of a revamped referral program for the company's current and future customers. The raffle was spotted by Twitter user BabyTesla3, who took some screenshots from the official Tesla app showing the new credit scheme. Enter for your chance at a free Cybertruck, reads the description of the electric pickup lottery. One winner will be selected at random to receive one of the first Cybertruck VINs off the line. No reservation needed, free of charge. Multiple entries allowed. As mentioned in the official raffle description, it's free to enter, however. Anyone who wants to have a shot at winning needs 500 credits in their Tesla account. Credits can be accumulated by giving somebody a referral link to buy a Tesla product or by buying something from the company directly, which returns loyalty points. To this effect, the Fremont-based EV maker has revamped the loyalty program, which now offers the following benefits. Referring a Model S or Model X gets the referrer 3,500 credits when the purchase is finalized. Referring a Model 3 or Model Y gets the referrer 2,000 credits. Buying a Model S or Model X gets you 6,000 credits, while the purchase of a Model 3 or Model Y automatically gets the buyer 3,000 credits. Tesla's referral program has been quite a roller coaster ride, with it going online and offline several times in the last 5 years. And with success stories and not so great experiences, at least when it comes to YouTubers. Back in 2019, EV content creator Andy Sly revealed that he managed to earn not one but 2 Tesla Roadsters in just 2 months using the company's referral program. A year later, however, Rich Rebuilds said that his referral code was cut because of bad faith. In 2021, the referral program was canceled by Tesla, only to be put back in operation 2 years later, albeit in a different form than before. Source: reposted and summarized from Julian Nystrom at Inside EVS.